This is going to be an important video. There's a lot of exciting things happening on the charts, and you can just tell that the markets are preparing to make a big move in the next few weeks. We already had one of the biggest moves in history here. From the bottom of this move to the top, that was a 13.5% move in just a few trading sessions, and that's at all-time highs. That is extraordinary. We are truly living through extraordinary times. Now, since the last video, we did have the vaccine news event, and that triggered a major breakout of this triangle pattern that we've highlighted on the S&P 500. And we had that big reaction on the news from Pfizer. And that's why we always say never trade on the news. All right, we had a big spike. It looked like it was breaking out massively here. You don't want to buy and chase this kind of a breakout. That's not something you do. You wait for the backtest of that level. And we made an update on gameoftrades.net here as it was backtesting this triangle pattern. So this is an objective buy entry. We have a breakout of this consolidation pattern. It's actually a continuation pattern, a breakout backtest. That's a buy opportunity. And that's something we've talked about throughout this entire move. Ever since we had that reaction, we drew that trend line and we talked about this continuation pattern. We have an uptrend continuation pattern here, and a break above this trend line would trigger more upside. So this is looking constructive for the S&P 500. Now, don't think this is 100%. We can come back below and that would become a false breakout, and that would damage the technical picture significantly. And we'd look for a retest of this level here if that happens. That is something that can happen, but we're not trying to predict the future. We're trying to assess probabilities. And as long as the price remains above this trend line, the probabilities are that we're heading higher. So that's point number one on the technical picture from a completely objective standpoint. That's the first bullish development. Now, point number two is that you should click the like button on this video. It really helps our channel grow and get this content out to more people and make our effort worthwhile. So thank you very much for doing that. Now, point number three, and we're going to try and keep this very simple. What are the big developments after this move? So we're going to make this video very structured and easy to understand so that you know exactly what we're watching on these charts. All right. So this is the channel that we were looking at throughout this entire rally. This is the trend line right there. And that's the top of the channel right there. You can see there's two reactions here and multiple areas where this trend line acted as resistance along the way. All right. And look what happened just recently. We had a breakout here. And so far, look at these candles. Each of them open on that trend line, close on that trend line, open on that trend line. And so far, we're trading right on it. Okay. So that's a massive development as well. Again, if this holds, we should expect more upside on the S&P 500. We could see a bounce off this level, slight consolidation, then a bounce. All right, so this needs to hold for more upside. Again, if we break back down, that's bearish. That would be a rejection of that resistance level, and we'd likely head for more downside here. So you can start to picture how you can potentially organize a trade setup on this with a stop loss, giving you some room just under this trend line here. That would be a nice stop loss for a potential trade with lots of upside to go. Because if you're looking at this trend line for targets, we're going to zoom out here and look for targets on this trend line. The blue line is going to act as resistance, and the top of the channel is going to act as resistance. So that's going to be potentially the melt up that we've been talking about. If this level holds, if we don't have bad news around the economy and things continue to look good for the future, then we'll see the S&P 500 continue within this channel and potentially head up to 4,000 points in short order. So that's point number two. Pop back above the channel. Again, it needs to hold. It needs to hold, and this needs to be monitored. Now let's move on to the final bullish point we're seeing on the chart, and this is the single most important point. And for that, we need to hop onto the weekly chart of the S&P 500. So that's the weekly chart of the S&P 500. And if you remember, something we've talked about many times on this chart, this is what we look at the most on this chart, this trend line here. Going from the very bottom in 2009, getting a reaction here, and then all the way through the bull market, it acted as a perfect line of resistance here. All the way through 2013, 2014, right here in 2018, the top of the bull market in February. And now we're going to zoom in to what's happening right now as we speak. So this is the zoomed in chart on the daily chart, and this is the trend line that goes back 11 years, all right? And this is the trend line that goes back 11 years. You can see same reaction here in 2018. Now let's see what's happening right now as we speak. This move has actually taken the price to this trend line. Now we're currently, again, trading on it, all right? So the S&P 500 popped above it yesterday, and now we're coming back down, testing the exact level as we speak. So we're going to see what happens. Again, this needs to hold. If this holds and maybe consolidates for a while and then resumes off that trend line right here, that's the melt up scenario that we've talked about for months. This is what we've been talking about since June, a potential melt up in the market. And we said that would start if we break above this massive trend line level here, because that's when we'll be at all-time highs. And not only will we not have any price level resistance for sellers to step in, but we won't have any trend line resistance for sellers to step in like they did here in February. So along with vaccine news, recovery news, GDP recovery projections, that could really send the S&P 500 higher. And if this happens, and if this level holds and continues higher, we've really hit the nail on the head on this one. This is something we've been talking about for a while, a break above this line of resistance. That's what we've been expecting from a fundamental point of view. You can't predict this kind of a move with just technical analysis. You need to be able to handle the fundamentals very well to be able to predict these kinds of moves. So that's what we've tried to do on this channel, and we feel like so far we've done a very good job at doing this. If you've actually watched the videos fully and tried to understand what are the major points that we try to put out publicly, and that's what we're going to continue to do. And that's the ideology that we have at gameoftrades.net, to consider both the technical picture and the fundamental picture before taking trades, before making swing trades in the market, because that's how we've been the most profitable in our trading. Now, again, trading is risky, and these analyses in no way guarantee future results. They only assess the probabilities, all right? And we will reassess the probabilities if we have a rejection here. If we have a rejection, that will be bearish, and that will increase massively the probabilities of seeing more downside. But again, as long as we hold this, our bias is for a run up and for a run up to the all-time highs. Now, all of this is nice and optimist, but there are things to be worried about in the market. Not everything is looking as bullish as the S&P 500. In fact, for the first time in a long time, we have the NASDAQ 100. This is the NASDAQ 100 that's actually underperforming the S&P 500. So what happened on tech? We had a false breakout here, and the NASDAQ actually popped back below that trend line resistance. So this is a false breakout. That's bearish, and that really does not look good on the technical picture. So the NASDAQ is underperforming at a critical level. That is worrying. For now, it's only a slight underperformance, so we'll have to keep an eye on it. And so far in the past few days, it seems like it's recovering a little bit of gains, but it is extremely worrying. And why is that worrying? So why is that worrying, you may ask? Because the last time that tech underperformed the market, underperformed the S&P 500, after having outperformed was during the dot-com bubble. So I'm going to show you what I mean. We're going to head to a chart of the NASDAQ in the long-term picture. And so this is the chart of the NASDAQ during the dot-com bubble. And we'll see the outperformance with the S&P 500. So you can see the orange lines, the S&P 500, and this chart is the tech bubble of the 90s. So you can see there's outperformance, massive outperformance throughout this entire period right here, and then massive underperformance as the bubble pops and heads back to normal valuations that resemble the same ones as the S&P 500. So let's fast forward to 2020 and we'll see similar kind of action. Huge, massive outperformance of tech to the S&P 500. And maybe, just maybe, it's starting to underperform here at a key level. So again, it's only been a couple of days and we have to measure it out and watch how this behaves. But this is something we've talked about many, many times. We have a growth bubble in the market. And this is the chart we've shown many times, the growth versus value bubble. Growth has outperformed significantly over the past 2-3 years. And that's been exaggerated massively by the health crisis right here. So we expect over the long term, maybe in the short term, this is going to continue. We'll see. But over the long term, we expect growth stocks to underperform value stocks like they did between 2000 and 2006. So why would that happen right now and not in a few weeks? So our thesis has been that the growth bubble in the market right now would end with a blow-off top like it did during the dot-com bubble, a massive blow-off top in tech stocks. And we expected the same thing to happen before the bubble is popped. But we have to consider the possibility that the vaccine news here just popped the tech bubble. Tech was overvalued, massively overvalued compared to the S&P 500. It still is. There has been massive speculation around these stocks. And now maybe with the vaccine news, investors are going to exit the tech hype and get into real stocks. So typically that's called sector rotation, and it doesn't mean that tech stocks will make a full crash. All right, that's not what it means. It can come in the form of a slight underperformance of tech stocks and a huge outperformance of the S&P 500 as the actual stock market begins to catch up to the valuations of the tech stock. So it's really difficult to tell which one it's going to be right now. We're still leaning towards the S&P 500 catching up to the valuations as a blow-off top occurs. But again, this is something we'll need to monitor, and we'll have to see how this underperformance develops on the NASDAQ and if it actually continues. Who knows? Who knows what can happen in the next few weeks as the number of cases starts to rise again. Now make sure to go ahead and check out our website at gameoftrades.net. We're putting out multiple articles per day, and 2 to 3 premium videos a week. We recently made an S&P 500 article on the put call ratio and whether that can stop us from taking long entries in the market, whether that increases the risk in the S&P 500. We also talk about our trading strategy on Bitcoin and gold, and we make detailed analysis that's dynamic with big news events like the recent vaccine news. Now, this video was sponsored by PrimeXBT. Now listen up, because I know this is going to be something interesting to a lot of subscribers. They have a Covesting feature on their platform. So you can go on their platform and find outperforming traders and copy their trading activity. So it's really simple. It's easy to use. It makes you see different trading strategies, different portfolio diversifications. So it can be profitable, it can be educational. And by the way, if you are a trader and you've become profitable through watching our videos and the content on the website, you can go on their platform and grow a following and receive success fees from your own trading. So make sure to go check that out. It's a very interesting feature. The link is in the description below. Now, I hope you guys enjoyed this video. If you did, make sure to drop a like on this video. In the meantime, good luck on your trading.